Good morning. Happy Friday. We made it through another week and we are into the first day of March, which is my birthday. I won't give you guys the date, but my birthday is in March and I am a Pisces, whatever that means. We'll take that with a grain of salt. But this is an exciting month because we get quarterly reports at the end of this month, which is a strong indicator for what's going to be happening in the markets. And I think we're going to see some inflation adjustments based on Q1 of 2024. So, welcome, guys. Welcome to the Market Pulse podcast, another great episode. And I've got lots to unpack as the market and advances in technology and just a lot of really exciting news has happened this week. I'm going to make sure to cover all the major highlights that happened in the last 7 days. And I'm not quite sure what episode we're in, but we're broadcasting live this morning. And just to let my viewers know, next week I will not be broadcasting live. It will be a day early, but I will capture the market from Thursday night. So when the market's closed, so that you guys can get my full week technical analysis on gold and the S&P 500. But let's go ahead and jump right in, and we'll start with our normal disclaimers. So here we go, guys. All right, so let's go ahead and jump right in then. We're going to start. Let me kind of give you where we're starting. We had some market records this week, and the topic that we're going to be going over is NVIDIA. And I know we talked a little bit about this last week, but we just can't ignore it because they just keep hitting the news headlines. And NVIDIA hit an all-time record high dump in market cap in single days. So it's won the record in the largest single dump in market cap. And when I say dump, I mean like a pile of cash got dumped on NVIDIA in an increment that's never been seen in the market in any stock in the history of all time. It beat Meta, or you could say Facebook's, the conglomerate Meta, by a long shot. And so we're going to talk about NVIDIA, the potential opportunity. You know, obviously these are my opinions, but I'm going to give you guys some really great insight on whether NVIDIA is a buy or a sell, and for how long also I think is going to be important to know, and where emerging opportunities in the AI space will be. So let's jump in to what I call the snooze you lose segment, where we talk about the latest in news. And if you are caught on the sideline snoozing, well, you wish that you hadn't. So here we go.
Breaking news.
What you're about to see may disturb you.
I'm going to throw up this document where I'm going to go into detail on what is going on with NVIDIA right now. NVIDIA just hit $803. You can see the climb that we've had since the beginning of the year. We've hit all-time record highs, and the largest increase happened this week in market cap. And a lot of that has to do with the reports that came in from NVIDIA on earnings for Q4 2023. So if you look at NVIDIA's stock, you can see this just massive skyrocket. I mean, we had this happen February 9th, and then based on the news of the largest dump on February 29th, today we're seeing it hit all-time record highs again. People are just dumping money into this stock. And I will tell you why. I'll tell you like what analysts and people are saying about this. So one of the data pieces that we talked about that's really caught the market by surprise was the single day market cap gain. And here are the top 10 single day market cap gain winners of all time. And they've all, because of inflation and the value of the dollar obviously going down, in the future, we'll probably even have higher ones. But this really shows, from Microsoft down in the top 10 to Apple, NVIDIA, May 25th of last year had one of the highest ones, then Amazon, then Apple again. Then if you guys remember Meta had this kind of like crash, like market crash. And then Zuckerberg did this just brilliant cleanup where he went in, fired a ton of people, kind of dropped off of this Oculus, this metaverse push, cleaned things up, got marketing back lined up, and we saw one of the largest gains in that stock when people really saw, oh, Meta's going to get back on track. And then this week on the 22nd, NVIDIA dumped $247 billion in a single day, guys. $247 billion in a single day got invested in NVIDIA. These people who are watching this, clearly from hedge funds to money market managers, to even people, retail investors like you and I, were watching the news, watching for these gains to come in, and they came in way above projected, and that's what's causing this dump to happen and the continue rise that we've seen today, even being March 1st. So here's the data that came in that caused this reaction. This is Q4's fiscal 2024 summary for NVIDIA. And I know these numbers can bore people, but guys, if you don't get into the details of these numbers, it will never make sense to you why we're seeing market moves like this. And the reason the market moves the way that it does is forecasters, people who, let's just say, have brains bigger and smarter than us and collaborated together, can come up with consensuses far greater than our human mind can do on its own. And now we have tools like AI that help also with these forecasts. But these forecasters right now are predicting what the end of March is going to look like for NVIDIA and every other stock, the S&P 500 as a whole, interest rates, inflation. They're all doing these forecasting measures. And it's their job not to be wrong. They get paid really well, actually, not to be wrong. They don't get paid to have a bias. And so these individuals go in, these brainiacs, and they create what's called these forecasts. And when actual comes in better than forecast, better than predicted, the market will move. If actual comes in worse than forecast, then the market will move, but in a negative direction. And so when these numbers come out, you see the market move unless it's like it was really close to what they predicted, but it was not. Revenue in Q4 came in at 22 million in excess revenue. Q3 you can saw was 18, Q4 2023 was 6. So the year over year gain was 265%. Guys, that is enormous growth in a year, 265. And so people are looking at this going, this stock is undervalued. The forecasters were wrong. They did not predict it to go this high. Gross margin was at 76%. And then one of the ones that I like to see is operating income. Operating income was up 983%. So NVIDIA is killing it. And is there a future around NVIDIA's potential growth? And if I were asked, do I think NVIDIA has more room to go? I would say the answer is yes. And here's why. Monsters like NVIDIA, who have this computing power and the ability to put outputs out as fast as they do, are such large whales in their industry, and they have such a strong first movers advantage that right now what's happening is the competition is looking at these margins. The competition is looking at this insane interest in AI computing that competitors are going to be coming in. No questions asked. There are going to be people looking at this margin, and it will be a whittled down into margin until there's nothing left in profit. Another way to say that is one person's profit is another person's opportunity. And right now, we are seeing insane amounts of profit in the AI computing space. And so competitors are going, how can we start making competitive chips? And we're already seeing some of those emerge. And by the way, that would be a huge tip to go look for emerging competitors in the AI processing space, because these profits are another person's opportunity. And frankly, because of the monopolistic opportunity inside of NVIDIA with this first mover advantage, they can charge way more than probably the market should allow. So competitors will start to make this highly competitive, processing costs will start to come down, and things will adjust. Well, how long will that take? My prediction is before a competitor could come in and actually take a big chomp at this revenue, it's going to take 2 to 3 years. So I would say the next 2 to 3 years of NVIDIA growth, NVIDIA profit margins continue to go up, will continue until the competitors come in and take a nasty bite off of this revenue. So I'm actually fairly bullish on NVIDIA. And it's not, I mean, I've got a lot of warnings around this, but it's not that there's not room for a competitor to come in and take the bite. It's that they're just not positioned. There's no one positioned in a way to take a big enough chunk out of NVIDIA's profits right now, because frankly, there's no one lined up to do the AI processing in the same way. And frankly, blockchain technology and the gaming community is what set NVIDIA up for this. It just so happens that the processing type that's required for AI processing lined up with blockchain and gaming technology to use these same, they're called gaming cards, guys. They use these gaming cards to basically do the computing processing for AI. All right, so what else should we be talking about? Well, here's one of the reasons I'm also bullish on NVIDIA is where's the demand coming from? And right now you can see there are 3 separate sections. One is gaming, and you can see in Q1 of 2023, gaming went through the roof. I have some explanations for that. I think it had to do with COVID, people not working, and there might be a blend of confusing gaming with mining, some blockchain stuff. But regardless of that, gaming hit an all-time high of Q1 2023, and I think it had to do with COVID. People were at home, they're bored, they wanted gaming. They bought cards, built their own computers so that they could have these really great gaming computers. But data center, look at the spike from Q1 24 prediction to estimate Q4 of 24. So these are these reports, right, coming in saying, hey, this is what we're predicting. This is where we think things are going to go. And these are based on actual orders. So companies come in, they get funding, and then what they do is they go to NVIDIA and they say, well, on this month, we're going to need this many more cards. On this month, we're going to need this many more cards. And so these are all projections based on future orders. So this is a highly predictable forecast for where NVIDIA is going to be. And this is why their stock is growing, is they're already predicting strong growth into 2024. Now, I have something to say about this. These are not real orders. This is not cash obtained yet by some of these orders. Do I think it'll actually happen? Yes, because most of the companies asking for these orders have money. But there is a weird risk that no one is talking about right now with AI. And the risk is that none of these AI apps or proof of concept AI companies are making any money. No one's buying these cards because they're making money and they need more cards to make more money. There's no one out there that I know of that's doing this, that's buying cards because they need more cards to make more money. What we're really doing is we're building out the internet. Again, what's happened is the the profitability that we would normally project into a model when investing, it just is non-existent. And I actually found some models that is really similar to this when we were building out the internet, and we saw the same type of market cap gains in a company called Cisco. And we'll come back to this one. Let me show you this one. So pre 2000, pre 2001, before the dot-com crash, Cisco, like NVIDIA, was building out this new technology. They were the infrastructure for this new technology that was coming out called the dot-com, or the internet that we all enjoy. And you can see that Cisco's price, similar to NVIDIA, went through and had a massive spike based on the speculation that we were going to need this thing called the internet. And just like AI, I don't think anyone's arguing anymore that we're not going to need this, that this isn't going to be something that radically changes humanity into the future, just like the internet did. However, if you look at NVIDIA, this is the NVIDIA is in orange, Cisco is in blue. You can see what happened to Cisco after, and it was largely influenced by the dot-com crash in 2001. But what happened is the crash happened and it amplified the reality around Cisco's value that, oh, maybe what we're building, we really haven't proved yet. And so what we're going to see that we haven't yet with AI is all the speculation comes to a peak, and then applications for profits around the speculation start to come in, and we call it a changing of the sea, right? The tides start to go out into this new cycle called, let's see what actually is working. Let's see what actually is making money. And a lot of these apps, a lot of these applications that frankly don't make money at all, and we're going to talk about one of them that had a huge mishap this week. The tide's going to go out, and we're going to see who's got their pants down. We're going to see who's going to be profitable. We're going to see who the winners and losers are. We're going to see things like AOL back in the 2000s, right? Completely disappear. We're going to see things like hard disks and disk drives completely go away, and we go into like the cloud. We're going to see all those things start to happen. And so is it possible that we see a curve like this for NVIDIA? Yes. I think this might be a little premature. I think we might actually be, like, if we were to compare this on the orange line, we might be actually a little lower and a little further to the left on NVIDIA, meaning that this actually sits kind of to the left. And we've got that, what I was saying, another 2 to 3 years of potential gains. However, you don't want to hold this thing for 2 to 3 years, because if they're starting to predict the peak, it gets priced into the market, and then people are projecting, well, in 3 to 5 years, this is going to be the value, and they start pulling out of the market. And so I think we've got some more bullish territory for NVIDIA. However, watch it in about a year, maybe 18 months, you're going to be wanting to look for, like, is there an exit? How's the competition coming into this? And is the demand still there? Right? And maybe NVIDIA does something that's like mind-blowing, changes the industry, comes up with a new AI chip, and then becomes the industry leader again, and that is completely possible. I want to show one more chart, and this is the revenue in millions based on different types of industries that are using these chips. So, and it's just not that great, by the way. There's not a whole lot of money coming in from these AI chips or AI processing, but where we're seeing the most revenue right now is in data centers, meaning a data center sets up a huge rack of these NVIDIA cards. And then if you are an AI company, you say, I need those cards to process, create this LLM, make this game, make this chatbot, make, whatever, these image renderings. The tooling is required for the AI. Even though the company that's maybe requiring it isn't making any money, you still have to pay for the fuel. And so we're seeing data centers have skyrocketed and are projected, just like the last one, to go into a skyrocket by end of 2024. So this is why we're seeing NVIDIA price is going through the roof is because the predicted demand going into the end of this year is astronomical. And you can see gaming is predicted to go kind of up, but mostly sideways. And then professional visualization, auto, and then OEM other, it's all pretty much flat. So it's really data center demand. These data centers are saying, we need a ton of these. They're putting out orders. They're putting out requests for bids, basically. The only place they can get is NVIDIA. And this is why the new proposed demand is so high, and it's caused the stock to go up. So that is my full capture on NVIDIA. Obviously, guys, you can pick up that stock just about anywhere on any platform. Again, not trade advice, but my opinion. And do your own homework on this also. Check my resources. Get an alternate opinion on this. All right, so we're going to be moving into our next segment. And I call this next segment our bulls, bears, and brain farts, where really we just go into a psychological focal point to make sure that the machinery up here lines up and is in a high vibration, is in a well-oiled state, so that when you take it into the market with all your knowledge, all your experience, the mechanics of trading are working properly, and your brain's not interfering. So we're going to jump into my bulls, bears, and brain farts section, and we will bring up some insightful things that I thought would be fun to share. Farts are the part of the mind that just get in the way sometimes. It's that old lizard brain, that reptilian brain that we used to have as cavemen, that's still a little hyperactive and kind of gets in the way, even though there's not a bunch of saber-toothed tigers jumping out of caves to eat us. So I wanted to just share two quotes and add some insight onto these quotes. We'll keep this segment simple. And the first actually comes from Warren Buffett. And I love this quote because it's very simple, but there's a lot of depth to it. And I'll share this with you, and then I might even say it again. But Warren Buffett said, "We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful." And I want you to sit with this, because what it's pointing to is the populace. What it's pointing to is this thing we do from a collective consciousness state. Society, the market, is a reflection of the emotional sentiment of any one thing. Example, NVIDIA that we just saw. The market is reflecting the collective conscious sentiment based on the price. You could even say that up green is positive, red is negative in terms of sentiment, and this is very collective. But what Warren is saying is that a lot of this is emotional. A lot of this is not actually tied to something in reality. It's tied to a feeling. It's tied to maybe this bulldozing effect that happens from the populace. And to really be a winner, you almost have to stand out. You almost have to have an unpopular opinion that you're willing to stand behind. And so we simply attempt to be fearful when others are greedy. We look for opportunities that when NVIDIA is at an all-time high or the market's at an all-time high, we look at an opportunity to be fearful in that moment when everyone else is even financing and throwing down money that maybe makes no sense. We look at the opportunity to be fearful. Is there something here I should be afraid of? Rather than jumping onto the common consensus. A lot of you, after hearing about a stock or hearing about a growth, you get FOMO and then you buy in and it's already too late. And so to be greedy only when others are fearful is when you want to jump in. And it's one of the hardest things to do when trading. That when something is going straight down, you still look to see if there's an opportunity for growth. You still look to see if this is a good, solid company ran by good, solid people. And when everyone else is selling, you're looking for that opportunity to buy. Now, that doesn't mean you should buy everything that's dropping. It just means that you're finding the opportunity in the ones that you should be, right? Like we talked about Meta. When Meta made the mistake of like really investing hard into the metaverse, had way too many employees, over projected, under delivered, and then what happened? It didn't land. No one wanted to be in the metaverse. And then Zuckerberg did this brilliant thing that when everyone else, I mean, you should go pull up the stock. It was incredible. When everyone else was still fearful, what they underestimated was Zuckerberg. What they underestimated was how powerful Meta's team was. And they went in and they cleaned stuff up, and stock prices went right back to where they were. People got greedy. The smart ones got greedy when everyone else was afraid. And that's where the opportunity is, plain and simple. All right, here's one more. This is from Alexander Elder. Alexander Elder. You can be free. You can live and work anywhere in the world. You can be independent from routine and not answer to anybody. What is he talking about? What is Alexander pointing to? He's actually talking about day trading. Day trading, like being someone who's got enough money set aside in the market that you can go, you can day trade, you can pull revenue out, you can pull money out of the market. And as he says, you can be free, you can live and work anywhere in the world, and you can be independent from routine and not answer to anyone. I still don't have that privilege. I mean, running a business, sitting on multiple boards for businesses, having investments in multiple businesses, there is a residual aspect that's really nice where I don't even have to show up to trade, so to speak. However, to maintain it, there's a lot of time and attention required. And it requires me working with other people, right? You got to have good social skills. You got to be in the office. I got to be, even with COVID, we tested like the not working from the office. It didn't work that well. So you still have to have interactions with people. You got to be kind of where your partners are in the same demographics, the same area. A lot of this is changing, but you still have those problems. But with trading, you've got everything. You can be anywhere in the world. Now you got, Starlink. You could be on the top of Mount Everest. I would not recommend that for trading, but you could be. And you could be trading anywhere in the world because now we have satellite internet that's relatively fast. You could live anywhere, be anywhere. And ultimately, I think that's the definition of freedom. And that's why I love trading. That's why I love introducing people to day trading, is frankly the freedom that it provides people that I just don't know where else you could get that. And I'd love to hear from you guys in the comments, like where else does that freedom exist? Where you can live anywhere, be anywhere, not have to answer to anybody, and have the independence that you want while also making the income that satisfies your luxury lifestyle. I don't know. All right, so there's your bulls, bears, and brain farts. It's our psychology section. And I'm going to transition a little bit. We're going to move into another segment that I just can't ignore, because this was kind of one of those dumb things that happened this week that frankly, it's like, you're not going to be able to cash this in. Like this, there's no way to make money. This was a dumb investment idea. It was a dumb mistake by this company. And we're going to talk a little bit about Google. While NVIDIA was skyrocketing, Google has had some problems, and we're going to see. We're going to see if they're going to be able to clean this up and start leading in the AI space. So we're going to go into my segment that I like to call, You Can't Take It to the Bank. All right, so you can't take that to the bank. What are we talking about? Well, I'm going to bring up this link, and there's no easy way to talk about this, guys. This has been all over the news, all over Twitter. I've seen it on YouTube. Everyone is talking about this. And if you haven't heard about this, you get to at this point. Gemini, a competitor to OpenAI, it's a an AI assistant, let's call it. It's gone beyond LLMs. They do image rendering now. But Gemini uh kind of had a big mishap, is what I'll call it. And even the CEO is calling it a blunder. And I think that's a very generous term, very clever term, by the way, because their stock price has recovered quite a bit since this. But I just want to show you what's going on with their AI tool, because this shows, I think, what people are going to be looking for in AI. The problem with this, and I'll just show you this first one, and it'll give you an idea of what's going on. Gemini, when they released their image rendering tool, like OpenAI has with Dolly, they created this thing, and it immediately, users were like, this sucks. This has a weird bias. Some people are calling it a woke bias. Some people are saying it's got some political agenda. I don't know. But what I do know is that it wasn't fed the truth. And so the outputs we're getting have a very strong bias. And let me just show you what I'm talking about here. So what was proposed here is, show me an image of the Pope. And what we got was this lady who looks, I would say, probably Indian, dressed up in a Pope's outfit. And then what we have on the right is this African American guy who is also dressed up as the Pope. And nowhere is there what has actually been the pigment of popes over the last, 400 years, at least, plus, of a frail, fragile, pale, white dude. And so people are, I wouldn't say furious about this, but a little concerned about, like, why would this happen? How could this happen? And so before I show you some of the other results that Gemini has been putting out, I want to share with you a little bit of my sentiment around this and how I think the market is going to react to this, and frankly, look for opportunities and companies that aren't going to do this. The internet and the mission of the internet was to provide real information, all information, to anyone who had access across the world. That was kind of its mission, is the information era, we even called it, right? That the internet created for us. And what came with that people loved, and the reason we subscribed to it, is it gave us the truth. I mean, sure, you could find lies and biases, but eventually through a bunch of search and looking, you could find the actual truth of what was going on. And for that reason, we valued the truth, and the truth got ranked the highest, and it drove people to the internet. It just did. And it was one of the great blessings and ways as a society we advanced the fastest, is we didn't have these interesting biases. Well, Google and whoever's running Google and whoever's feeding this LLM or this AI image rendering tool in this case, clearly has some type of bias. It's being fed some type of anti-white or anti-pale skin pigment because it wants to have this kind of fair balance of things, which I don't think is wrong in any way. And Google has the right to do that as a company, right? This is not like a government ran project. They have the right to do whatever they want. However, I think people are going to be deterred by this, because if you ask for something and it doesn't give it to you, you're probably not going to use it anymore. And yes, you might have to go back to search to like get the actual rendering, but it makes the argument of, one of two things are going to happen. Open source is going to lead, and people are going to turn to open source, like kind of the .com internet became, or companies are going to have to change and comply, which the CEO of Google made very clear this was a big mistake, and they are working to fix it. And their stock price, I think actually it we had one of the largest drops in Google because of this in Gemini. And then we saw a pretty large recovery towards the end of the week after the CEO spoke. But let me just show you how crazy this was, like how bad this was. And you can draw your own conclusions on like what the heck is going on here. Why would this happen? So later, this member on Twitter, or I should say X now, Frank Fleming, put in a question. He said, give me an image of a medieval knight. And what did he get? Well, he got an image of two females, one guy from like Arabia, looks like, or somewhere from the Middle East, and then this kind of dark-skinned guy from, I mean, I wouldn't even know where he was from, but no image of like a Spaniard, no image of like some pale white dude, which would typically be like, from just a ratio and numbers perspective, it should be at least one of four, right? Based on like how many, people of white skin are out there or pale skin are out there, who don't happen to be Oriental or Asian, Chinese, Japanese. So just an interesting bias, just an interesting thing to observe. I'm not saying one thing or the other. Next one he did is give me an image of someone eating a mayo sandwich on white bread. And again, nowhere is there an image. I mean, you just can't get this thing to put out pale skinned people. It's got like some pigment issue. It like doesn't want to do it. So he's like, okay, well, maybe it's just me. Maybe the odds are wrong. So he went to his next question. He said, give me an image of someone who's bad at dancing. And if there's anyone bad at dancing, we all know it's white people, right? And that is, I will own that. But again, no one on here is a white male or female for that matter, right? Then it asks, and this one I thought was funny, generate an image of a guy who looks like his name would be Seamus. And, you have this guy on the left, which it's like, okay, fair. But then you have these like two guys. It's like, okay, maybe they could be Seamus. And then you have this like, what appears to be a woman. And to just make matters more complicated, has a badge that says Seamus, just in case you got mistaken. Like, hey, we were making sure you knew that this guy, who's clearly not a guy, is named Seamus in the right corner. I mean, it's very confusing. Like you'd imagine you'd get just a bunch of guys. How we got a gal in here, I don't know. But frankly, people aren't going to use this tool. And then here is the funniest one. The one that I was like, what is happening here? Because the bias is going both ways. It's just not producing the truth. Do I think this is like intentional racism? Absolutely not. Do I think this is like intentional wokeism? I actually don't think so, because this is really a unique counterexample. Is he says, generate an image of a team of professional basketball players, and this is like a bunch of white dudes. And it's like, wait a minute. So are we just not giving the right answer here? Are we taking what would be normal and then flipping it so that I don't get it. Anyways, they took a ton of heat for this. The CEO came out, called it a blunder, and they are working on this. Now, Google is known for not putting out products. Google is known for not putting out products fast enough or making mistakes. And so this actually might be the new way that they're saying, hey, look, we got to get stuff out. The competition's beating us. Let's keep up with competition and be okay with making mistakes. But we kind of see the backslash when Google does do this and makes mistakes. People do not like it. So how is this going to turn out? I'm sure they'll get this cleaned up. I'm sure it's a hot topic right now, but they may have to scratch their entire AI training model, because maybe the foundation it was built on was just frankly built on a foundation that came in with a very strong bias. And now to redo it, it's like you got to throw the whole thing out and start over. I don't know. I don't know if they're going to be able to fix this by retraining. I think they're going to have to probably start over from the foundation. So this is a big issue, and Google's stock price reacted to it. I don't think it's done. I don't think we're going to see any major improvements in Gemini going into the future. All right, we're starting to run out of time. Let's move into our next segment here. What the nerds are up to. Let's go into that segment. You guys are going to love this. We're going to talk about what happened to Bitcoin. Here it is. And I'm really excited about this because what's coming also, I've given really, this will be my second tip from this podcast, and I think Bitcoin is going to be something you just cannot ignore over the next 6 months. But here we are, what the nerds are up to.
Rock, Paper, Scissors, Lizard, Spock was created by internet pioneer Sam Cass as an improvement on the classic game Rock, Paper, Scissors. All hail Sam Cass. Hail.
I have been a nerd since long before anyone heard.
It's fun. Let's jump into this. You guys are going to love this. So Bitcoin hit 64,000, as you guys know. It's been all over the news. I'm going to go through some bullet points, though, on what my personal sentiment is on Bitcoin. And a lot of people are saying, well, there's no way it can go any higher. I'm going to do a fundamental analysis right now. I'm going to go through some bullet points that I've highlighted on why I'm bullish on Bitcoin fundamentally. And then we'll do a technical analysis also so you can see this. But as you guys know, Bitcoin surpassed 64,000 this week. It's sitting right at about 62 right now. And it was largely influenced by the ETFs that got approved in January by the SEC. And we have this upcoming Bitcoin halving that will happen in April. And if you don't know about halvings, I'm going to show you all the data on that so you can get up to speed. Now, Bitcoin's halving event, what will happen during the halving is daily mining output will shrink. And the current daily output is about 900 Bitcoin a day. So right now we're pumping out about 900 Bitcoin daily. And yesterday, the ETF purchases alone was over 10,000 Bitcoin. So just yesterday, from ETFs, like the doors of ETFs opening into the market and their ability to buy Bitcoin, we saw 10,000 Bitcoin purchased just yesterday, just this week. Now, this is equivalent to 12 days of mining output, right? We're talking about how many coins could get mined, like what's the daily average, and how many just got bought. And that's not counting individual investors. So 10,000 Bitcoin were bought by ETFs. Were there a bunch of other people that are individual that bought? Absolutely. But equivalent to the days of mining, that's about 12 days of mining output. Now, this significant demand from ETFs will continue. Like, we haven't even started. People are going to see the price now and call their financial advisor and probably want to get in on Bitcoin again. And it's going to take a couple days before they can put their orders in. And then their broker calls and buys the Bitcoin, right? So the demand is still there. We're going to talk a little bit about supply and demand. And because of the ETF demand and the limited amount of Bitcoin that can be mined, this 900 daily, this becomes a problem. Well, this story gets better. Let me share what's about to happen with the halving and the significant demand that still exists and probably will go up. So the price of Bitcoin increases, as you guys know, when demand substantially exceeds supply, right? When demand is higher than supply, price goes up. When supply is higher than demand, price goes down. That is the law of supply and demand. That's how economics work. Well, post-halving, mining output will get cut in half. That's what the halving means. We will go from 900 Bitcoin daily to now 450 Bitcoin daily, literally in a day. So the amount of Bitcoin that could get output will get cut in half. So that means the amount of Bitcoin that will go out into the market from mining is going to shrink. And is ETF demand going to go down? I don't think so. Again, personal opinion, but I don't think so. I think it's going to at least hold, if not increase. Now, If demand remains constant, if this demand from ETF remains constant, I think it actually potentially could grow and we could see even larger amounts over time. The demand of supply ratio would increase from right now a 12 to 1. So I just took basically this 10,000 Bitcoin that came from this, the daily 900 a day. It's about a 12 to 1 ratio to 24 to 1 when the halving happens. You see this? So it will put an increase in demand on Bitcoin. There will be less supply. And so what happens, guys, when that happens? You see a run up. You see the market go up even further. So let me show you this chart that I think also ties all of this in. Let me show you the Bitcoin halving chart. And this will show you historically what has happened to Bitcoin every time the halving has happened. And you can see, you know, obviously the trajectory of Bitcoin is in the upward side since 2011. And every time we've had a halving, you've seen kind of a consolidation period and then some major growth in the middle. And then as people anticipate the halving again, you see it settle down. Halving happens, there's usually a little bit of a drop, and then we see this growth, and then it starts to settle again, knowing the halving's coming again, and then it settles during the halving, growth again. So what do I think is going to happen to the price based on now we're going into a technical analysis? It should start to calm down. The price growth should start to calm down. Will there be some volatility? Absolutely, but it should get less volatile the closer to the halving we get. And we've seen that every time we've had one, that it becomes less volatile. The price kind of stabilizes. It typically is in an upward trend still, but the slope of it decreases significantly. And then what happens mid-halving is we see a massive spike, and then there's a sell-off. And we've seen that every single time before the halving. So we just saw the spike. The big spike was 72 before. We're coming in now at like 64 again, which is a higher lift than we saw before, but I think that was largely influenced by the ETFs. And we're going to likely go into a consolidation period. Halving will happen, and then we'll start to run into the next bull run based on past performance. This is all based on the past, guys. Now, let's go into the fun stuff. I'm going to show you, we're going to open up green chart, and I'm going to show you a technical analysis I did, and then we'll do gold and the S&P 500 like I like to do. This is where I get to show off a little bit. So here is Bitcoin on green chart. And I just want to kind of highlight some things here, but I'm going to zoom in on this because it's important to know why and what these lines are coming from. So when I do a technical analysis, and this is a lot easier with Bitcoin because it's already in a price that it's been in the past. And whether the past is never the same as the future, but gosh, we love the past as humans, don't we? We compare everything to the past. Even we project into the future based on the past. It's just what we do. And so based on that, we can predict pretty well that there's going to be a lot of echoes from the past going into the future. So what do? We pull up the price and we go look at the price that Bitcoin's been at all the way up to 72,000. It kind of caps out here visually at 70. And we're going to look for our support and resistance levels. And so what did I do? I came back into 02 and I pulled up the peak that happened 2 years ago. And we found our support levels, one at 52,000, one at 55,000, definitely one at 60,000 because that rounded number, we just love easy numbers. Then 64, we're starting to see some resistance. You can see this old top that we hit back in, what was that, April of 2022. And then we saw, I think that's 22 anyways. Let me just check my notes here. Yeah. And then we saw 66,000. And then we saw 70,000, and that's where I drew in my support. So these levels, guys, you can write them down, take a picture of this, however you want. These are pretty solid technical levels for Bitcoin going into the future. So what do we do with this? What does this mean? Well, then I took in our channels. Oh, this is a daily chart, by the way. Then I took in our channels, and you can see we were in a nice starting in January of last year. We were in this really nice climb. Into this year, we started to really the angle about September going in, the angle at which Bitcoin was growing really started getting some velocity, and now we're even in a higher breakout. So this this is why Fibonacci works the way it does, is when something wants to grow, it just the theory of what goes up must come down is always true. You just can't keep increasing the speed at which you're going up. It's not possible. So we're seeing kind of an exponential curve that's happening here, and there will be a slowdown. It just is what happens. But we've gone from a slope that's like a 1-to-2 ratio. It flipped to like a 2-to-1. Now we're in like a 4-to-1 in terms of how fast this thing is going up. Will it go to an 8-to-1? I mean, it could, but at some point it's going to slow down. So we broke out of this channel that kind of set up back in October of last year. We've broken out. Because of that, I want to show you the two pennants that formed, one that formed early this year. Pennants are great technical visuals of a future bull run. When you have a flag or pennant pattern, it means that you've had all this growth and then consolidation, and then the likelihood of growth again is to hit because it likely hit a support or resistance level. It grew until it hit that support and then started consolidating because the price is just banging up against the wall. And then the next time there's something fundamental or technical that happens that adds a lot of pressure, it just breaks through the next level. And that's what we saw with the ETF approval that happened in January, is the price has just continued to grow. And now we're in this consolidation period over the last couple of days, which has formed another pennant, which means what? Well, pennants, just like we saw in the past, like to continue up. And so my prediction on Bitcoin is we have lots of bullish momentum. This is not a short-term play. This is a play that I would say would go into probably the next year and a half if you're going to place some bets on this. And because I'm saying that because of the halving, there's going to be a lot of volatility, a lot of risk in Bitcoin right now in terms of like trying to guess and time these short-term moves. But if you can be long-term on Bitcoin, and with the halving coming in and this increase in demand and a lowering in daily supply getting added to the market, I think what you're going to see is the price go up. It's just the laws of supply and demand. So here is my Bitcoin technical analysis. I'm definitely bullish. There's some fundamental stuff like inflation and dollar printing and politics getting in the way with how we're fiscally irresponsible. All these, anytime we hear the news about that, and by the way, we're going to hear by mid this year, just count on it, about how our government is going bankrupt again and can't pay its bills. That's not a prediction. That's like a fact. We're going to hear that news again, and we're going to have to raise our limits again this year on how much we're funding things to keep the government from shutting down. That will happen again this year. No one's talking about it. And when that happens, that's great news for Bitcoin. That's great news for currency that is not reserve based, right? Something that cannot be tampered with or just printed on a whim because we are bad planners and we make bad choices as a government. I will say that fiscal responsibility will likely be one of the main topics for this next election because people are frankly getting tired of inflation and they're tired of getting beat up. They're tired of their money that they've worked so hard with being completely diluted. All right, so there's my Bitcoin analysis. Let's go into gold and the S&P 500. I'm going to let's start with gold this time. Let me save this. Let's go into gold. I nailed both of these, by the way, last week, guys. You're going to love this. But here was our last week's prediction. Oh, what's going on here? Come on. There we go. So I like to predict like the next couple days. Come on. And I've always been pretty bearish, or excuse me, bullish on gold, but we nailed this one. We said, look, here's where we're going to be. This is where things are going to go. We outlined bullish movement. We've clearly had a breakout in the channel, so we're going to have to redo this, but we laid out where this was going to go. We said there's a possibility it could end up in this lower quartile. It did not, and I do not foresee that happening, or I didn't foresee that happening, and it didn't. We definitely nailed the price movement on gold, but we're gonna have to redo this because now we've had a breakout, and so let's redraw this. Oh man, where are we in this channel? Yeah, we're in new territory, so we're gonna get rid of this also. I don't know if we're gonna be able to channel this. It's kind of in new territory, guys. Yikes. Yeah, new territory and almost all-time highs. Gold, it's interesting how gold's not being talked about very much because we had all this major news about NVIDIA and Gemini and these big stocks that frankly the market is just being shook by. This is kind of a secret trade happening right now. So here is Friday. This is what's happening today. We're going to push out and see what it's going to do into the future. So I'm actually going to do some predictive things here. And just looking at this, this is a higher risk trade already. So this is something I would maybe sit on the sidelines with because we're not quite in a breakthrough, but we're sitting on what was resistance and now is support. So we're going to change the color to green on this now because we've just come above the 2076 level. And now it's like anything could happen. This is where they say, let your profits run, can get really exciting. And what I mean by that is if it goes up, if it continues, this could be a really great trade. I'm not going to make this dark. I actually think it's more likely that it's going to live in this zone here. Come on. Huh. Oh, that's why. Here we go. There we go. I think it's more likely to go sideways inside of this channel and follow the lower, kind of this lower support, this nonlinear support. I'm not really paying a lot of attention to the top line here. So just remember I said that. But if this stays in this zone, we're going to kind of widen this, by the way. If this stays in this zone, this could be a really great trade. And the reason is because of risk. You can place your stops right in this level. So you could place a stop, and I'm just going to kind of scribble here a little bit. So you could place your stops here, and you could put your take profits on a trailing stop way up here. So a stop loss, let's just get the value here, at 2070 with a potential gain of 2100, you can really allow this thing to breathe and continue into this bullish momentum. So that's where the benefit is to this trade. Although in terms of predicting that direction, I don't feel as confident just because I've seen anytime we hit an all-time high, there's just always this natural pressure to go down, and it just becomes a riskier trade because you don't have a lot to base it off of from the past from a technical standpoint. But in terms of potentiality to go up really high and take a low risk on the trade, it's a low risk option with a lot of potential gains. So you could set your stops here at 270, guys, let your profits run up, and you just let them run, lock in some profits. And like they say, let your winners ride, right? Let your winners keep going. So let me save this. That's my gold sentiment on technicals. Not feeling that great about it. Proceed with caution is probably what I would say with gold. Here's our S&P 500. Let's look and see how we did on this one. This one was so easy. We predicted this channel. We drew in this channel. This channel is still holding, so we're going to project it even further out into the future. I love this. This is like my favorite kind of trading. We said, look, this is where we're at based on the new support at 5,000. I need to change the color on this. We were going to stay above. It stayed above. Hard not to predict that, right? We didn't have a breakout either direction. It's likely going to continue this. So let's just really pull this out into the next week. It's very likely that it's going to live in this territory. It's very likely that it's going to stay bullish from a technical standpoint. And so what does that mean? Let's just draw on a line. It means we want to be out here again, and it's just that simple. We're in the middle, so it just caution. If it goes down, your trade is riskier. To take a sell trade in an uptrend is riskier. To let the market come down, maybe Monday, Tuesday, and it comes down a little bit like it did last week, and then to buy in the middle or towards the lower side of this channel, that's going to be less risky. And so you're going to want to put your stop losses, obviously, towards the outside, put your take profits on the inside of this channel. Take a snapshot of this, guys. Prices are on the side. This is an easy one. I feel way more confident about my S&P 500 trade than I do my gold, just because it's, I mean, this is clockwork. This is really great stuff. So it could really go either way Monday. It could go short or it could go up. Generally up is the trend still. So if you want to play it safe, play by the trend. Don't trade against the trend. If you want to play it to the short side, that's fine. Just be cautious going into next week's selling. I'd be more aggressive on my buy trades. If I was day trading and I got a sell signal, I'd probably hold off on it, see if the market comes down, and then when the buy signal comes in, I'd buy back in. But you're going to want to be more aggressive, likely on the buy side than the sell side. Again, just my opinion on the markets, guys. Do your own homework on this. But if I were trading it going into Monday, that's what I'd be looking for. So that's it. That wraps it up. We did it. We did it in an hour. And that unpacked quite a bit. We've gotten 3 really, in my opinion, great tips on full technical analysis we did on Bitcoin, S&P 500, and gold. We also gave a good tip on NVIDIA. And if you wanted to do some extra credit, I would do some searching either through an AI tool or on Google for who are NVIDIA's competitors. Who is coming up with the next wave of processing chips for AI? Who's coming up with new AI exclusive processing chips? And I think you're going to find some winners in there. I think you're going to find the future of where money's going to gravitate towards in investing, as we're just not going to be we're not going to get rid of the AI stuff, guys. And it's not too late, by the way. Google, Meta, what was then Facebook, all these companies had years that you could have bought in and then got the most significant gains years after. So I don't get that FOMO that we're too late to be investing in the AI community. If anything, it might be the right time because you're starting to see the tide come out and you're starting to see like, oh, this is really where things are going. You can make a better investment decision. All right, so that wraps up my time with you this Friday morning. We will not see you same time, same place next week, at least not live. I'll be doing that as a recording, but I'll do it Thursday so that you guys have the market close on the S&P 500 and gold, and you'll at least have going into Friday and next week's my technical analysis on that. Outside of that, great having you with me, and we will see you same time, same place. And thanks for joining me for another episode of the Market Pulse podcast. We'll see you guys later.